Yeah, the stocks are rising as we approach the U.S. Thanksgiving holiday following that volatile few weeks, really, that has slightly dampened this year's enthusiasm for artificial intelligence. My next guest believes that investors are still assessing the winners and losers in the AI race. Let's welcome Michael Zinn, Managing Director and Senior Portfolio Manager at UBS. Michael, thanks very much for joining us. All right, can you hear us, Michael?
Yes, I can.
Okay,
can
there we go.
Me?
Okay, yes, no,
yes.
We're good now. We're
good
to
be
go.
With you, Roger. Yep.
Thanks for joining us. Are we starting to see winners and losers right now with AI, or is it still too early?
Well, I think it's kind of a perpetual flux, and so we did get, I think, some additional insight last week in some of the major winners and potentially some of the losers. And the market, I think, is just placing greater emphasis on seeing cash flow and utilization and liking some of the players that have a lot of the pieces already together at a lower cost. Some of the private players obviously have been much more heavily scrutinized of late. And so I think it's just the market beginning to react to the fact that there's been 4 or 5 months of great strength in the tech part of the market. It's becoming a little bit more discriminating. I think that's super, super healthy. Some of the more speculative areas of the market, the froth has come out of that area, which is also really good. And, I think every once in a while, when you see tech begin to take a breather, you see other elements of the market, healthcare, financials, begin to do a little bit better. And I think that's a positive. We want to see a broader participating market than what we've seen because leadership so far has been really, really narrow.
A little balance isn't a bad thing. What are the concerns over the private companies?
Well, I think the concerns are, what is the cost per chip for the amount of tokens being generated? And are there businesses that are associated with those companies that afford them the cash flow to make those expenditures? Or are they just going to the markets and relying on valuations for debt financing or equity financing or some of the circular financing? And so, it's not really clear yet, once we have widespread consumer adoption and enterprise adoption of these models, what is going to be the chip that really drives all of that activity? I think that's still being debated. And I think some of the releases last week kind of illustrate that. Are you looking for chips that are more specifically targeted for a particular use, or do you need a more generalized chip for more widespread use of training and inference? And I think the market is still kind of figuring that out. We've seen these private players grow to really large valuations based on their funding rounds. But of course, they don't really have cash flow positive businesses separate from that. And so I think that's what the market has been, a little bit concerned about. So I think that it doesn't mean that tech is dead by any means, but I think it's helpful just to be reminded that this is dynamic, and you could have a clash of the titans kind of dynamic here, where everyone is trying to encroach on everyone else's business and attacking the weaker parts of everyone else's business, and that could imply a race to the bottom, where costs are continued to be focused on, and so I think it just means that the market has a chance to look at other sectors that are participating, while tech kind of takes time to sort out the winners and the losers in the whole space.
A little breathing room probably isn't a bad thing for everybody. And health right now, a lot of eyes are turning toward that.
Yeah, they really are, and it really has taken a back seat, to tech probably ever since chatbots really came to the fore at the end of 2022, and so you had a lot of headwinds on healthcare. I mean, first of all, COVID, was a great boon for healthcare, but then it created a lot of excess, and it took a number of years to work those excesses off. Then you had the current administration and a lot of concerns about policy headwinds coming to the fore, and now we've gotten to the point where some of those policy headwinds have turned into tailwinds. Some of the policies not as draconian as the market might have expected. We've seen some good drug discovery breakthroughs. We've seen some good M&A activity, and we're seeing broad participation within the sector. Big pharma is acting well. Tools and diagnostics are acting well. contract research organizations, distributors, even the insurers are coming back. So you're seeing, even though it's a sector with a lot of different players and types, broad-based activity there. And so it's all still growing relatively well and still trading at a fairly nice discount to the overall market. So we think that the healthcare trade has legs. We think we'll continue to see M&A activity, IPO activity in that space. And so, after 3 years kind of in the doghouse, we see the healthcare trade having some leadership value in the overall market.
Can I get your thoughts on Novo Nordisk? It's having that off day after the drug trial, the Alzheimer's drug trial. They said it was a long shot anyways, but markets are not liking it. It's down $17 right now. I don't know what the percentage is that, but it's 5%,
Yeah,
6%?
I really wish I could delve a little more deeply into the individual names. Yep. So I have to take a pass on that one. But, I will say generally, obviously, the Alzheimer's market, the obesity market, those are the big markets that people are playing for. The total addressable market size for both those areas are really big. And so the stakes are high, when companies are gunning for those, and, their successes and failures will be rewarded or penalized by the market accordingly.
All right, and let's just quickly about U.S. banks. Almost $400 billion in unrealized losses. Any concerns on that?
Well, I think the outlook for banks, banks are generally considered to be rate cut winners overall. And so I think if we continue to get a Fed that seems to be willing to step in and lower rates and not having fiscal conditions be too tight, I see them as being beneficiaries. And I see AI continuing to help, their bottom lines as well. So, the unrealized gains or losses, in any particular sector at any particular time, I don't think that's what's driving these stocks right now. Overall, their balance sheets are still pretty firm. Their profits from trading and banking and net interest income, those are all holding up relatively well. So we think that's a sector to keep an eye on as well.
Okay, and one last big picture question. Rate cut. What do you think? Will we see one before the end of the year or in the first quarter?
It's a good question, and definitely a little bit of a jump ball. We obviously got some very supportive comments from a very, very influential Fed member at the end of that last week, which helped spur the rally. It'll be interesting to see the data come in, retail sales. There's been this debate about tariffs. When is inflation going to show up? The kind of last stand for the inflationistas, as sometimes they're called, has been the Christmas shopping season. The belief that maybe everyone had just anticipated the tariff regime and had gotten some inventory ahead of the tariff raises, and now that's all worked off, and now we may see it. And so if you have some real inflation data show up, it seems problematic. That's going to cast some doubt. I think that the sense that I think the market is getting as we head into the blackout period by the Fed this weekend is that they are going to lower rates. We've moved to 70% plus in the odds. If we get over 80% as a probability and we're well within the blackout period, then I think the market's going to feel more and more comfortable with the idea of an easing, and we should continue to see rate cut winners continue to do well. So okay. I would expect them to cut, but I'm also taking an oath of humility on this topic. It can go back and forth quickly.
All right, we'll leave it at that. Michael, thank you very much for joining us as always.
Thanks so much, Roger.
Michael Zinn, Managing Director and Senior Portfolio Manager at UBS.